Mr. Ganesh, Surya, President, Senior, Past President, Seniors, and dear friends. First of all, I must thank Raghavan for introducing me and also to the organizers for giving me an opportunity to be with you to talk on the topic which otherwise was not scheduled as such for today's seminar. When the chairman told me that, Mahendra, you have to speak for survey on TDS, specific surveys, TDS and recovery, the first impression was that, is there really much to speak on that? Because if the surveys are covered, these are also part of the surveys. But somehow he wanted, nahi, you be there and let the topic also be there. And then after we had this demonetization, so he wanted me to more speak on that, which my first brush was, please, I want a little break, because all the appeals and all that are coming up, so let me concentrate on that. But somehow it's very difficult to tell no whenever we need to discuss on a platform which is of professional interest for our professional colleagues and friends, and more particularly if it is coming out from chamber. But mind you friends, today I can say that yes, I must thank chamber, I must thank Ketan for giving me an opportunity. Had he would not have told me or pressed me, I would not have studied. And the knowledge that I would have got, and possibly still from your people's reaction, or if there are question answers, or during the brain trust, something more, I will get educated. And in the run, it's the win-win situation. The gainers are both the person sitting on this side as well as the person sitting on this side. Coming to the topic, well, I have, as I said, dual part. One is TDS on surveys and TDS for recovery. And the second one is amendments to IT Act on account of demonetization. The first part I will take a little later. I will try to touch upon that and try to finish in the smaller time that I have of 15-20 minutes, or maybe a little less than that. And I'll give you the reasons why I am not concentrating more on those survey part. Well, let us straight away come to the amendment in income tax on account of demonetization. Okay. First, friends, if you see the speech, the reason why this survey is, the amendment has come is during income disclosure scheme when it was going on, we experts had already opined that it is possible for SSE to declare undisclosed income in assessment year 17-18 instead of declaring in IDS. So if there is an undisclosed income, the opinion given were that it is better that you declare it in assessment year 17-18 and pay regular tax of 30% instead of declaring in income disclosure scheme and paying 45%. And after demonetization, deposit made on account of demonetization may be voluntarily declared by the SSE in his return of income in assessment year 17-18 as income from other sources and pay tax at the rate of 13%, applying the specific sections. By doing so, you would not be required to pay penalty because it's a disclosure already done. No penalty under section 270 capital A because there is no under-reporting of income. And this opinion was discussed at various forums in public, in social media, in newspapers, etc. We have seen recently that the government is not acting like a lame duck. They have become very active. They react also very active. And the reaction we can see by way of our Taxation Laws Second Amendment that has come up. After demonetization, some officials said in news that penalty at the rate of 200% shall be levied on unreasonable and disproportionate income of cash deposited. But having realized that pre-amended provisions are not applicable, are not capable to levy penalty if cash deposited has been voluntarily offered to tax at the rate of 30%. They have amended section 115 BBE and new penalty provision has been inserted by way of section 271 AAC from assessment year 2017-18. Now, what does the statement of objects say? That is more important. That is why I would like to read that two objects which have been given by the Finance Minister on 26 November 2016 when the bill was laid down before the Parliament. He said, evasion of taxes deprives the nation of critical resources which could enable the government to undertake anti-poverty and development programs. It also puts a disproportionate burden on the honest taxpayers who have to bear the brunt of higher taxes to make up for the revenue leakage. As a step forward to curb black money, banknotes of existing series of denomination of the value of 500 rupees and 1000 rupees, hereinafter referred to as specified bank notes, issued by RBI have been ceased to be legal tender with effect from 9th November 2016. So he is giving the reason in the first paragraph. Second, he says concerns have been raised that some of the existing provisions of the Income Tax Act could possibly be used for concealing black money. It is therefore important the government amends the Act to plug these loopholes as early as possible so as to prevent misuse of the provisions. The Taxation Second Amendment Bill 2016 proposes to make some changes in the Act to ensure that defaulting SSEs are subject to tax at a higher rate and stringent penalty provisions. The reasons given are very clear. Let us run through our slides and understand whether the reasons will be achieved, can be achieved by this. The concerned specific sections which we are going to deal, of course, is broadly section 115 BBE, but the sections which are covered are in 115 BBE covered are 68, 69, 69A, 69B, 69C and 69D. We will not discuss in detail what are these sections about, because if we start discussing that, possibly whole lecture we can only discuss those things. There are many anomalies on that. Now, inserted by Finance Act 2012, this section 115 BBE was originally inserted by Finance Act 2012 and with effect from assessment year 13-14. What was the effect of the introduction at that time? If any additions were made in the specific, on account of the specific sections, that is from 68 to 69D, and SSE having losses under other heads of income, set off was possible. And when SSE is an individual, where SSE is an individual or an HUF, which are taxable slab-wise, no advantage will be available and SSEs will still be paying tax at the rate of 30%. So earlier, prior to this amendment, the SSE could declare the income as income from other sources, and he would be paying the taxes at the slab rate. And many a times we people have seen that if the SSE whose income is either below taxable limit to reach up to the maximum marginal rate, that advantage saying that iska tuition fees bata do, Mehendi classes bata do, this classes, that classes, and the incomes used to get checked up, and either a cash in hand was shown or withdrawals were considered, etc., etc. To plug that, what they did was introducing 115 BBE. They said what such type of income, if they are not able to explain what is the source of this income, it will be taxed at the rate of 30%, and no expenses will be allowed or expenditures can be claimed. Further, no set-off of losses will be allowed. That was introduced from assessment year 17-18. Now we have amendment on 15th December 2016 by Taxation Law Second Amendment. Of course, there would be a little dispute whether it's 15th December or is it a 16th December, because the precedent assent as such we read was on 16th December. But when the Gazette came and we saw the Gazette, that shows 15th December. So at times you may be seeing somewhere that yeah, it was 16th December, but the Gazette talks about that it is the 15th December. However, it's not of much relevance except to the extent that if there happens to be a raid on 16th December or on 15th December, then what would be the effect of that? That we will come when we will be dealing with section 27011B. So with effect from assessment year 17-18, subsection 1 is substituted. There are two subsections in 115 BBE. One is been substituted, the two is as it is, but we have some concerns on that, but that also we will touch upon. What does subsection 1 say? Possibly you must not have studied, though it was there from assessment year 13-14. And to the best of my knowledge, for assessment year 13-14 or 14-15, no much additions on account of 115 BEE are made and the taxes are calculated on them. But now, mind you friends, because of this change, because of the hue and cry, because of the higher tax rates, this section will be used very, very much, and it would be very harsh, which we will see in some time. Subsection 1 says, where the total income of an SSE A includes any income referred to in section 68 to section 69B and reflected in the return of income furnished under section 139. So it is reflected in section 139 if you want to fall in clause A, 1A. B, determined by the AO includes any income referred to so and so. If such income is not covered in clause A, the income tax payable shall be aggregate of the amount of income tax, which says 60%, and B, that's not of much of a relevance, however. So if you are falling in A or if you are falling in B, in case of A1, you will 1A you will fall if you have so moto offered that income in filing your return of income and paid the taxes before the end of the previous year. Second, if you have not disclosed in A, if the assessing officer determines that income in B, in that case you fall in second category. So the differential rate are important. The difference is important because will come that has a tax impact on it. Earlier, friends, that is for assessment year 13-14 to 16-17, the income under specified sections were taxable at the rate of 13%, which is now been increased to 60% as per this amendment act. So from assessment year 17-18 onwards, if your income from 68 to 69D are covered for 115 DBE, you will be paying tax at the rate of 60%. Secondly, they have made two compartments, one reflected in return of income furnished under section 139 and not under section 142, because they are very specifically saying it is only 139. So if a notice is issued to you under 142 and thereafter a return is filed, your case will not be covered over here. Alright. Now, tax effect on account of this amendment. Amendment is made in chapter 2 in section 2 of subsection 9 of the Finance Act 16. Prior to amendment, if the total income exceeded the specified amount, only then surcharge was applicable, as we see it today, friends. If your income exceeds 1 crore, if you are an individual, or if exceeds 10 crores, you are a firm or individual, then the surcharge, depending upon your income and the status, the surcharge is applicable, 12%, 15%, etc., depending upon the assessment. Whereas that has been removed now as far as 115 BBE says. And they have taken it separately to show that surcharge at the rate of 25% will apply to the income determined under section 115 BBE. So 60% is there, in addition to that 25% is there, irrespective of the income you have, whether you have only 50,000 income which falls in 115 BBE, still you need to pay along with surcharge. Therefore, the effective rate which calculation has been already given, it will come to not only 60%, it comes to 77.25% as against 30.90% which was earlier there. Let us understand this by way of an illustration. An SSC had filed his return of income, wherein he had 50 lakhs business income and the income of rupees 10 lakhs was taxed under section 68. At the time of assessment, though the total income remained 60 lakhs, however, the combinations changed. The income which was 50 lakhs, out of that 5 lakhs income was treated that is income to be considered under section 68, therefore that becomes 15 lakhs. No effect on the total income. The tax effect without amendment would have been that nothing, 16 lakhs 25, 16.25, 16.25 in either case. Now after the amendment, what is the position? As per the return of income, you will be paying 19.25 lakhs. After the assessment, you will be paying 20.75 lakhs. Plus penalty that will come little later. However, since we are on the calculation part, plus penalty of 10% we will need to pay on that 5 lakh rupees which has been transferred to income from other sources under section 68. And then after considering that 10%, your total tax liability will be 21.25%. Now, if you see this 21.25% as comparing to the last year, what it would have been before the amendment, though the difference is only 4.5 lakhs as compared to earlier year, and which comes to 27.69% increase. On this 5 lakhs, friends, which is treated as an income under section 68, the additional tax of 40%, that is 30% plus the penalty, surcharge of 25%, cess, all have to be considered, and that comes to 51.5%. Now this would have a far-reaching effect. Unfortunately, this section does not talk about only demonetization. The reasons we saw, yes, because of demonetization, because of black money, and the penalty that they want to, stringent penalty that the finance minister wants to put on the black holders. Other than the demonetization, let us understand the effects on that. The most simple one, what we regularly face and very much faced even in this assessment year, which has got time barred, that is assessment year 14-15, wherein share applications, loans, bank entries, loan entries, etc., they have been treated as section 68. Now, till 14, 15, rather I would say till assessment is 16, 17, there is no much difficulty. The reason being you are paying tax at the rate of 30%. Why I am saying we don't feel much difficulty is because now we are seeing that we will be paying tax at the rate of 77.25%. But the worry would be abuse of the law. Individuals, low withdrawals, expenditure, kindly explain whether your withdrawals are sufficient. The assessing officer may not get convinced with the sufficiency of your withdrawals. He would say that, look, I have section 115B, wherein you will be paying 77%. Kya karna hai? So what we are worried is there is no threshold limit incorporated in this section. Even a small addition of 50,000 can invoke this section. Secondly, to keep a check on this abuse, there is no higher authority's approval required. Had that would have been the case, it would have been, not that it's very easy or we don't find it very comfortable, higher authorities also we know it. But nevertheless, if higher authorities are there, at least they would say that you also need to go to higher authorities, possibly we can discuss with them. But all these checks are unfortunately missing, and still we will come to the other problems what we may face for this amendment.
No withdrawals can be covered?
Yeah. Expenditures, unexpended expenditure. It will be covered, unexpended 69B.
Unless it is proved.
Unless it is proved, that's what I'm saying. Unless it is proved, like he will ask for your details of withdrawals and he will ask for your other
electricity
bills and etc.
Unexpended expenditure will be the department will have to conclusively prove that.
Yeah.
That's what I appreciate. So it will be abuse of. That's what I'm saying. It will be abuse.
They will start harassing. That is correct.
They will start harassing.
So it will be probably not standing the
Conclude. It may not. The test when we test it, it will not get concluded. Yes.
Correct.
Okay. Now, after this amendment from assessment 17/18, SSE is permitted to disclose his unexpected income on his own in his return of income. Earlier, friends, you must have seen that this section 68 to 69D were a provision of a penal nature, that you have some credits or you have some expenses or you have an investment you are not able to explain on account of that, and I am making an addition on account of that. Normally in your return of income this was not disclosed. But now they have clause A and B which says that the SSE so moto can offer this. So can we not say that this is a perpetual disclosure scheme, that whenever an SSE feels, whichever assessment year from 17-18 onwards, this is a disclosure scheme which will be perpetual. Every year on year you can go and disclose it. The answer to that would be yes, if the SSE is prepared to pay the taxes at a higher rate. Let me touch upon before I go to subsection 2, we had assurances given by the officials. These officials, when they had, after the demonetization, the people started depositing cash in the banks. Immediately after demonetization, an assurance was given by the government that cash deposit up to cash deposit. Before that, let me take up subsection 2. Before that, let me take up again subsection 2 so that I can complete 115 BBE as Second, it talks about notwithstanding anything contained in this act, no deduction in respect of any expenditure or allowance or set-off of any loss shall be allowed to the eligible assessee under any provision of this act in computing his income referred to in clause A of subsection 1. It talks that number one, no expenses would be no expenses will be allowed to be claimed. Number two, the expense only the category which falls in A, and A category is where you have so moto disclosed in your return of income. The second category is the category we show where the assessing officer will be determining that. So here, can we understand that the person when the assessing officer is going to determine, he will be able to allow me the expenses or set off the losses? Logically speaking, the answer is no. That should not be the case. Apparently it appears that there is a lapse, which we will be possibly seeing this amendment in the coming budget, that they would be including this second clause also, wherein it would say that no expenses, etc. will be allowed. However, the question remains that it talks about allowance and expenditure. Whether the deductions will be allowed, that is chapter 6A deduction if the donations are made, whether that can be allowed, because here it does not talk about the deduction. That would be a grey area and a debatable area. But if you ask me, in my view, yes, it should be allowed, because it doesn't talk about it specifically. However, at AO's level, it will be directly computed, let me tell you. Because even today in our return of income, though none of the SSCs would have offered directly under section 68, etc. But still in return of income, we do have a schedule which says that if your income is taxable under 150 BBE, you need to disclose it separately, and then it is taxed separately. So the system, I would say the programming of the computer would be in such a way that once it falls in that, no deduction, no expenses would be allowed, and directly it will be captured at the rate of 60% plus cess, etc.
This has a direct nexus to subclause 2 in clause B.
Clause B, yeah.
The amount of income tax which the assessee would have been chargeable
Yeah.
had his total income been reduced, if the loss return has been reduced, loss has been reduced
No,
by way of this addition.
they have already amended it. That no loss will also be.
This has a direct nexus to subclause 2.
Or subsection 2 has a direct nexus to subclause 2?
Yeah.
That means
subsection 1. Last Roman 2.
the amount, you're talking about this, right? The amount of income tax with which the assessee would have been chargeable to his total income being reduced by the amount, that amount has, I understand. So reduce from that, for the taxability part it is. It is only for the taxability part. So that your other incomes, what is there, that has to be reduced from there. Not the loss set off amount. Okay. Now prior to amendment it was considered, that we have discussed. The treatment of cash deposit due to demonetization. This I think everybody is worried about, and let me tell you, nobody will be able to give a clear-cut answer, and the reasons why let us discuss that. If the source of income represented by deposit of specified bank notes can be explained, then such income is not taxable under section 150 BBE and will be taxed at normal rates as applicable to the SSC. So what is important is the source of income. If you can explain that, represent that, then that's fine. If not explainable but offered in the return of income, then you have to tax it at the rate of 77.25%. If not explainable and not offered in the return of income, then you have to increase that 77.25% by way of 10%, which will come to 83.25%. So this will be the situation. Now what happens? The assurances that we had received immediately after demonetization which was given by the government that